Joining us right now is D.A. Davidson Senior Vice President and Senior Research Analyst Tom White. And you initiated coverage on the stock with a buy rating and a target price of $75 a share. Good to have you on the program. Tell us about that.
Thanks for having me. Yeah, so, look, the buy rating on Lyft is really a function of the near-term momentum that the company's had. As you mentioned, they've steadily grown their market share here in the U.S. They're really the momentum play in terms of U.S. ride sharing. Longer term, there are some questions about profitability and sort of how long that they can get there. We do think that they can achieve profitability long term in their core ride-sharing business. They are, at their core, a two-sided marketplace model. Those online marketplaces tend to be profitable, particularly if you can be the sort of the number one or number two player in the market.
Tom, hi, James Freeman at the Wall Street Journal. I'm wondering, as you look at the long-term value here, how big does driverless vehicles fit into it? Is the valuation assumption that pretty soon transportation is just a service you buy and it's a robot driving and Lyft is right in the middle of it? Or do you not need to believe that to like this company?
Well, I think, for over sort of the next 12-month period, I don't think you need to be a big believer that autonomous, totally transforms the landscape for transportation here in this country. We think that the market for ride sharing in the U.S. is probably about a $105 billion market. Uber and Lyft have really been able to, through the sort of the ease of their products, the on-demand nature of their services, really sort of expand the traditional market for hire cars. Longer term, if ride-sharing prices can come down over time through a function of either autonomous driving technologies or through other means, potentially increased use of shared rides, that sort of thing, we think the addressable market for these companies, can be, closer to that $1.2 trillion that Americans spend annually on transportation, auto transportation in the U.S. But our price target and our kind of buy rating on the stock for the moment, sort of views that as a long-term possibility, but not really an underpinning of our thesis.
But Dagan, you made the point earlier that the company lost almost $1 billion. I mean,
right, and it was up from the loss was in the 600 millions the year prior. But what was that? What is the potential for that number to come down significantly in the current year? I know that in the roadshow, Lyft was talking about as it builds scale, it will be able to reduce its insurance prices. That's one of its big costs.
Yep. So on the roadshow, from what we understand, they've been talking about leverage on insurance, leverage on payment processing. I think the other two very big levers are the incentives that they provide for drivers and riders to attract them to the marketplace, and also the investment in autonomous. On the incentive side of things, I think what will be interesting to see is whether or not the IPO of Uber, which we all presume is going to happen later this year, whether that could actually be sort of a catalyst for a bit of a moderation of the competitive intensity, right? As private companies, both Uber and Lyft have been really focused on growth at the expense of profitability, trying to maximize market share. Once they become public companies, we think there's a possibility that they take a little bit more balanced approach on growth versus profitability, and maybe you see that competitive intensity around attracting drivers and riders moderate a bit.
Do you know who told me that? A Lyft and Uber driver here in New York City. I got in the car a couple of days ago, and I said, "Do you drive for Lyft too?" And he went, "Yeah." He was like, "Hey, did you hear that the price range is going to be higher? It's probably going to be in the low 70s."
Yeah, they're
and and he said, "I don't expect them to lose $900 million this year because they were losing that kind of money trying to take on Uber ahead of the IPO.
Wow.
They were trying to take market share, and so they were kind of spending money at this steep loss."
Well, I love it that the drivers have a stake in all of this now. This is really good stuff.
Sure.
I like this idea a lot. Tom, thank you for your insights. Good to see you this morning.
Thank you.
Tom White joining us.